Welcome back, and joining us on the show now is Dhruv Goyal. He's CEO at Steelmin. Dhruv, hi, thank you so much for taking time out for us today. I want to start with the overall sense on the Indian steel market because all the brokerage reports that we seem to be getting point out at the sector getting better from here. The demand is anticipated on the higher side as well, and the prices seem to be stabilizing too.
Thanks a lot, Manisha, for having me. You are right that there's some positive sentiment in the market. Things are better compared to what it was maybe a few months back. Demand is better, especially this is a pre-election year. So this is generally the trend if you look at the 5 or 6 elections. And I think a very important factor what we have observed is that the imports could be restricted in coming months, as most of these companies or the importing companies in China, Vietnam, their licenses are not getting renewed. There is no official declaration, but it is taking time to get the renewal, and we expect that the implications will be seen on the import volumes maybe from January. I think it's a good news for Indian steel industry. How long will it go? It is tough to say, but yeah, at least for the short term, seems to be a positive note.
It clearly is. Dhruv, also, how are you looking at the very near term, especially from the China point of view? Because the data there is still uneven. The World Steel Association report does suggest that we have seen higher production month-on-month basis for the month of August.
So there are very mixed sentiments in China. A lot of people feel that government may come out with some policy on restricting production. On the other hand, some people feel that since margins are low, so mills may not cut down the production because their fixed cost will increase, so the production will remain high. But for certainly the Chinese domestic demand will take some time to pick up.
Dhruv, also, what's your sense on prices going forward from here? Because when you look at the China steel rebar futures, we're trading at a 6-week close onto this one. I mean, having said that, these prices have been very, very volatile. I mean, in matter of days, if not weeks, we see trends changing.
I think India is little immune from the global market, as
Sure.
we discussed that the demand is relatively better compared to any other part of the world. So I think from Indian context, prices look stable to positive. But if you see globally, I think it will remain volatile and in the range bound to the lower side. But as I said, that the only benefit to the Indian market in short term could be that imports may be restricted after January for some time, as the licenses, BIS licenses are not getting renewed.
What is your sense on consumption going forward? Because there has been a very strong Moody's report suggesting that until 2030, we could be looking at stronger numbers, cumulative, in sense of that. Any number that you're working with in sense of consumption over the years?
So it is quite inevitable that India's steel demand will remain positive. By 2030, we are expecting the total consumption to be around 200 million ton from a current level of around 120. So yeah, we are quite bullish on the Indian growth story.
What's your sense on the ingredients here? Because when you look at the coking coal prices or iron ore for that matter, we've seen these prices gain up as well. How does that impact the sector?
Yes, coking coal prices have increased in last few weeks, although the implement or the impact will be seen in the next quarter. Iron ore in India, it is not very globally connected because most of these iron ore is being sourced domestically. So yeah, the coking coal will have the impact on the margins, but I think iron ore prices are quite stable, although it has increased in last a few weeks, but it has uh, it has increased in lines with the increasing steel prices.
Within the space, Dhruv, which company or where are you looking at in sense of prices or, when you look at companies as well, what would you say could do better than the other?
I think mining companies are relatively better placed
Okay.
compared to steel companies. Yeah, obviously, steel companies which have their own captive mines are better placed to companies which have to be dependent on the domestic iron ore.
Dhruv, you said that we are pretty isolated when it comes to for India as compared to international markets where the concerns seem much higher, whether it's about US or China. Even Europe numbers are not so steady right now. How long do you think we could continue to be isolated like that?
I think till election things look better.
Okay.
But at least, yeah, there are capacities which are also getting added to in the Indian system. So probably 24 could be a little challenging for Indian steel mills, but at least for next 6 months, we feel that demand will remain very strong.
So the next 6 months look good for demand. Thank you for joining in and giving us those details. Manisha, thank you for taking us through with this conversation as well. With that, we'll slip into a short break. On the other side, we'll put focus on Nomura's note on India and what it says. Stay tuned.